Good afternoon, everyone. This is Anne-Marie. Today is February the 25th, and this is a look at SPY after hours. I know it's kind of an odd time for me to do one, but I didn't do one this morning. Um, Technically challenged with the new website. Data migration being the black art that it is. All right, so moving right along, take a look at what's happened. Now, I've been of the mind that 61.8 is where it is that we're going to come into rotation. And so let's see what telegraphed this move downward. Now, learning event right here. There are reasons that people have trouble with technical indicators. And truthfully, I'm going to take it back to math. They're the guys who figure out what's actually happening in the process, and there are the guys who learn the formulas. And the guys who learn the formulas, by and large, just understand how to pick up the square box and stick it in the square hole. That is not the way to learn technical analysis. And most of us, frankly, are caught in this particular rut of, okay, well, if it clears the blah, 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 then I'm going to go. Listen, everything's relative. And I hate it that it is, but it is. So let's just roll with it and get along. If you understand form, you will understand where the market is going and what is most likely prior to getting there. For instance, this morning, we had this pop up, right? Well, the ZB was way down at support, and we said, oh, all right. Well, that looks like it's going to lift, so we're going to have a little bit of a pullback in the market. Well, a little bit turned into a lot. But notice this. Up here at resistance level 2, folks, plug your pivots in. Pivots work because they're easy and everybody uses them. So that is really the reason you should be using them, because everybody else does. So if we see the loss of R2 and it pops back down and it loses these VWAPs here, right? Popped up. We've got this low. It gives us a lower high. What's the formation? If I come in off a target that I had prior and I pull back into 38.2, pop into a lower high, and then lose my pivot, guess what I'm going to do? Yeah, I'm going to retest my low more than likely. And that's exactly what happens in here. Now, I contend that we really have a little bit more of a pullback. Listen, the market is not broken, folks. It's just behaving normally. See, this is abnormal. This is normal, right? Pulling into the 61.8. Hey, listen, we might have ourselves a really nice ABCD pattern to work with at the end. Whatever, just roll with it. And pay attention. Don't think about things just, all right, it's lost this, or I've captured that, or it broke out over. I hear this all the time. Oh, wow, that's breaking out. No, that's just testing resistance. There's a difference. And you can tell the difference based on what else is going on in the market and the continuation candle that you might want to see. So, what's the point of my diatribe? In the end, trading comes down to one simple thing. Do you understand support and resistance? And in terms of the broad story, what is relative support and resistance? If I break relative support, guess what? I'm going to be short. And if I break relative resistance, I'm going to be long. Let's not try to complicate trading. Goodness knows I have over the years. But the longer I trade, the more clarity I get about what it is that I'm actually seeing. And that's just experience, right? So just keep at it. And if you get to the point where you say something like, I feel like I'm learning these rules, and then there's always some exception. There's always some exception because trading is not easy. It's relatively straightforward, but it is still not easy, okay? E equals MC squared is truly relatively straightforward. It's just not easy to work through those calculations. All right, same thing. So what's the bottom line? Here we are sitting at the 50% level. 50% is a very, very big ratio. It's really, really popular. People trade the bounce off of it all the time. Look at what's happening underneath. We got the DPO, detrended price oscillator, moving back to the upside, getting close to zero. And then we've got the SMI. This is the ergodic oscillator, right? So we've got the SMI pulling down into here, very red, right? Notice what happens when this thing is really red. When it's really red, it starts popping. Is that natural? Of course. Look at the size of this candlestick. It's extremely emotional. So what we are going to do, see, we filled the gap. There's a little bit of a gap left there. Gaps fill, folks, most of the time. So we can count on them filling most of the time. So we just want to watch for them and then pay attention as it comes into them and then holds the relative support, right? It popped down into here. Where did this stop? Looks like right about this wick right here. What should we do? A lot of people trade this bounce. Should it come into this level? Yeah, it should. 150 is kind of a round number. If it comes into this level and shows weakness, what is it doing? High, low, lower high, lower low, lower high, telegraphing a lower low. That's all there is to it. Okay? So you want to come in on those tighter time frames and say, hey, what can I do? How can I trade this tightly? Please remember that because the market's fractal, these things are going to retrace a little bit. They could retrace 50%, could retrace 61.8%, could retrace the whole thing. We just want to watch it. And as long as your candlesticks or your formations are making lower lows and lower highs, you're going to be on the right side of the trade if you're short. All right, I'm going to do a follow-up video. We're going to talk about, for those of folks looking at the memberships, we're going to talk about the joy trade and the re-entry event. All right, so good luck, and I'll see you all tomorrow.